Hey there, my name is Aaron Hughes and I'm the real estate investing copywriter. And in this video, I want to answer a question that I'm asked very, very often by real estate investors, including some who are just new to the industry, but those also who have been in the industry for a very long time. And that question is, how many brands should a real estate investor have? How many brands should a real estate investor have? So when I say brand, I'm talking about kind of the company interface that you are bringing to the market to interact with your audience. So like the logo, the name, a tagline, the persona, the emotion that you're communicating, the offer that you have. So that is your brand. And for the purposes of this conversation, I'm actually not going to talk about your company entity or your websites. Those often get combined into the brand, but they actually are kind of different. I'll give you an example from outside of the real estate investing world. When you're thinking about going for a burger, then you are talking about going to McDonald's. You're talking about the McDonald's brand. You're not talking about the corporate entity, which might be, McDonald's International Operating Group or something like that. And you're not talking about the website, which might be, McDonald's.com or McDonald's Monopoly Contest.com, or, you can have a whole bunch of different websites. We're just talking about the brand itself, the name, the logo, the colors, the tagline, that persona that you're using to kind of interface with the world. That's your brand. And the question is, how many of those do a real estate investor need? And my answer is you should have as many brands as you have audiences. So for example, if you market to motivated sellers and then you buy a house for yourself and you fix it up and you rent it out to tenants and you hold that house, you're kind of a buy and hold investor who kind of like fixes up houses, but you buy them like at below market prices. You're really only targeting one audience, just motivated sellers. You should have one brand for motivated sellers. But let's say you are a turnkey wholesaler. And so you are marketing to motivated sellers to get properties. But then after you fix it up and put a tenant in place, you are then marketing it to cash buyers to acquire that cash flowing asset. So you have two audiences. So you need two brands. Or let's say you are a real estate investor who markets to motivated sellers and to cash buyers, and you are kind of like a guru real estate investor who coaches other investors. So then you would need three brands: motivated seller brand, cash buyer brand, and your guru real estate investor brand. So it really depends on how many audiences you have, because each of those audiences is different. I do not recommend that you have one brand that tries to do all of those things, because when you do that, you basically erase the effectiveness of your marketing, because you're trying to communicate different messages to different audiences, but all under that one brand. So here's what this would look like in real life. Let's say you are a turnkey wholesaler who markets to motivated sellers and cash buyers. So an investor like that might only try to have one brand. They would do so incorrectly, in my opinion, but they would have one brand that would be like Example Home Buyers would be their brand. But then they'd have a little button up at the top that says, if you're an investor, click here. But most of their website is for motivated sellers, and maybe there's a little bit of content for cash buyers, but it's really a confusing approach. And the name doesn't necessarily resonate. The brand doesn't resonate with cash buyers. So in that situation, you have two audiences, motivated seller and cash buyer. You should have two brands. So you might consider something like Example Home Buyers as your motivated seller brand, and Example Cash Flowing Properties as your cash buyer brand. And so then in that case, you would have you'd have one brand for motivated sellers, one brand for cash buyers, and you can work those very differently and deploy very different marketing because they're very different conversations to very different audiences. So that's kind of what it looks like in real life. And then to tie in kind of some of the other pieces like the websites you need, then you would have one website, for example, directing to your motivated seller site, and one website directing to your cash buyer brand. And that way you can create marketing that speaks effectively to each brand, and you're more likely going to do more deals because when the right audience lands on the right brand, they will resonate with the information on that site. And that strategy is going to work for you for quite a while in your real estate investing business. You'll be able to grow into that and scale that for a long time. However, I should tell you that you can actually become even more sophisticated than what I've described, although you may not want to do that too early. You probably want to just focus on your one brand per audience approach for quite a while, like years. But you can get to a point where you are sophisticated enough to split those brands even further so that you may take your motivated seller brand and actually split it into a few different brands to work with, say, homeowners in financial distress, homeowners who are going through divorce, and homeowners who are, I don't know, senior citizens that are looking to extract the capital and move into a retirement community. So you could subdivide your brands, and there's like 3 motivated seller brands that you might subdivide out of one. Same on the cash buyer side. You might have cash buyers who are looking for cash flow as their primary desire, and you might have cash buyers who are looking for something else, like an inflation protection or appreciation. So you can kind of subdivide your cash buyer brands as well. But that's a point of sophistication that you don't need for probably years. Like, you're very likely going to need just one brand per audience, and that will be enough for you to scale profitably for a long time. And then as you become more and more expert in what you do, and you get your systems in place, and you turn your business into a marketing machine, and you're doing deals all the time, and you got a really strong team, at that point, you may consider subdividing your brands. But for now, for most investors, I would say for 99% of the investors watching this, just start with one brand per audience, and that will take you a long, long way. All right, I hope this was helpful. My name's Aaron Hughes, and I'm the Real Estate Investing Copywriter. And if you want more strategies and tools to help you do more deals in your real estate investing business, head over to realestateinvestingcopywriter.com.